This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
That's what brings the viewers back. That a boy.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Good morning, everybody. It's Thursday, September 4th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn up 3/4 at 418 3/4. November soybeans were down 6 at 1025 1/2, and December Chicago wheat was down 5 1/4 at 516 3/4. No export sales here this morning. Those will be out tomorrow morning, 7:30. So we'll jump right in here, guys. I guess, Dustin, what's on your mind this morning? Not a whole lot in the way of fresh news. Feels like we're doing some tech trading here in corn and beans the last couple sessions. So I guess let's get your thoughts, and then we'll throw around the room.
Yeah, I think we've been kind of talking about it, but, corn has a oversupply problem with so many acres, but really good demand. And beans have an undersupply problem with too few acres, a dry finish, but really, really poor demand. So China, up to this point, has bought 0 new crop beans. And, it's obviously a pretty critical part of the year that this is clearly sending a message. And market's really taking notice. The market, the bean corn ratio is back down to where it was prior to knowing this acreage shift. China's got coverage out from buying tremendous amount of South American supply here the last couple of months and right through October. So yeah, it's I think it still comes down to yield, but if the market is truly pricing in as China just being out with this last military parade and Trump's comments on it, I don't think that's I think that's partly why we've seen beans kind of come off its recent high on this move.
Very good. Ben, what's on your mind this morning?
Just it's interesting trade with, like you said, some technical trade. Tremendous amount of corn swapped hands at 18 and 18 1/4 yesterday. It was kind of an anomaly. I think that people that are selling beans could be out of pocket really quick on them if some things were to go our way. It doesn't feel that way this morning. Corn's putting in some work. See how it finishes on the week, if we can get another higher weekly close. So failed post first notice day rallies in beans and wheat, and corn staying strong so far. Yeah.
I guess, Justin, what are your thoughts? I mean, it's kind of like a broken record. We're nothing fresh here.
Just kind of looking at beans, for example, you've got, the 4 biggest moving averages that I look at in a 7-cent range in November beans. And we went through 3 of them last night. So we've gone through all 4 of them 12 times since May. Wow. So just to kind of show you they've basically flatlined, it's just this choppy, call it 75-cent to $1 range that we just keep sloshing back and forth through. Get people excited when it breaks through at the upside and vice versa on the downside. And I think that's kind of goes to what we're talking about, just shrinking supply and shrinking demand for beans. So it's a tough spot. I do think it's going to be interesting. I think we're kind of getting really excited on the demand side for corn and the supply side at the same time. I think as you get further down the line, South America is kind of running out of soybeans. They've sold so much to China for trying to prove this point that I think you look at Q1 forward, I think it could be a different story for corn demand versus bean demand personally, but that does nothing right now. But, I do think safrinha crop's going to be a real thing. I think we're front loading a ton of corn demand because they've been selling so many beans out of South America to China. So that's been the lion's share of all exports. But now you see, us being competitive in both So until the next soybean crop comes in and, call it February, March, where there's real offers, I think we start seeing bean demand pick up from here, but it's coming from basically a zero level outside of the rest of the world. So.
Yeah, and I thought you you made an interesting point this morning on Australia and some of the things they're doing too. So it just appears to me that more and more, I don't know if the right word's isolationism or whatever China's going for, but they're making it known that they're not excited to do business with the U.S.
No, so I think they're trying to cut deals with Australia for canola. So that actually isolates Canada, and then more Canadian supplies are available in the U.S. market. So the soy complex is getting hit with a lot of different things right now. Luckily we did lose some acres, honestly. There was, positive news on, some E15 developments out of California. So I think that's a positive on, corn demand in general, or maybe even biofuels in general. So I'm hoping that kind of flows into renewable diesel and some of the things we've been talking about as well. Again, kind of broken record, but I think it's becoming more and more obvious that we have to rely on domestic demand, versus China. China's just not going to be a reliable importer, I don't think, going forward.
It doesn't feel like it. Dustin, interesting. We've was doing some reading this morning, and I know you have as well. We've got a couple of interesting crop insurance new policies and things like that are coming down the line. And I just wanted to put a plug there that I know guys are going to be getting busy, but it is worth visiting with your consultant on some of the things that are coming down the line, because they've got different pricing discovery periods and decision times that need to be made. So maybe just touch briefly on that here this morning.
Yeah, so end of this month, we'll have sales closing for the margin products, MCO and margin protection. So that's gotten a lot of people talking about it because, input costs have been rising. I think that's a big concern for people. Not necessarily for or against these products. I think that, there's big reasons for you to, consider waiting just for the spring time frame, depending on when you buy your inputs and how you match up to that. But it is something worth just noting. We will have more information about this too for our client base. But the biggest thing this year, of course, is the huge subsidy increases for things like the county-based policies or riders, ECO and SCO. And then MCO also has a big subsidy increase as well. MP does not. So we're talking about, 80% of the premium being paid for some of these products. I think that they're a very good deal for the value because of the subsidy. But that's also going to be the case for the spring products as well too. So, but yeah, it's a good time to start to look at it. The end of the pricing window will be the 15th. So we're going to put more information out on the 16th as we kind of know more about it.
Yeah, and be sure, folks. Once we get those prices discovered, and we'll do a deeper dive, certainly in some analysis on these products. But give us a call. We'd love to work through that with you. We've got some software we can show you how all these different scenarios can play out. So be sure to reach out and give us a call. We'd love to work with you there. Guys, let's move quickly here over into livestock. Rye, choice cutout seems to be hanging in there. And after 7 straight consecutive higher closes for hogs, we set back a little bit. So what are your thoughts as we start the morning?
Yeah, a little bit of a disappointment in cash so far. We've seen a little bit of 242 to 242.5 trade in the south, so generally kind of steady-ish around there, maybe even a tinge firmer. But in the north, looks like we saw a little bit of 383 yesterday, so that'd be 2 to 3 lower. So I mean, at this point, you've kind of made a little bit of a move on the board, but things are starting to consolidate a little bit. We have not made a new contract high this week, which is like really sad to say. It feels like it's been forever since we've actually had to admit that, but that's where we are. So this is the seasonal kind of time frame where prices are generally kind of vulnerable, but it looks like we're starting to see a little bit of an early roll start to form out of the October contract and the December contract for both cattle and hogs. So I think that could create a little bit of volatility, but overall, yeah, cutout was back up. We had choice back up 259 and select back up to 156. And this was really the concern this week. So it still seems like it's hanging on right now. So I don't think there is a little bit of a silver lining here, but next week is really going to be the challenge. So overall, there really hasn't been a disruption in the trend. Just kind of feels like it's kind of flat trade for right now. And on the hog side of things, yeah, we finally snapped the streak. Triple digit losses yesterday, but on the other hand, open interest was up pretty good. So I think maybe we are drawing out some of that producer hedging. Just the fact that we're kind of knocking on the door contract highs for the October, December's, making new contract highs in the back. But one of the caveats yesterday, I think the weights were coming up a little bit more than expected, about 2.5 pounds. Or at least almost up 2 pounds from last year, and up from 281 the previous week. So maybe we're starting to catch up a little bit, back things up slightly on here. But, overall, it just seems like we're in that seasonal time frame where you've had a really good run as far as futures go. Carcass holding up okay, generally pretty firm, up 61 yesterday, and cash just kind of steady, a little bit weaker yesterday. So overall, the news isn't that bad coming into the day, but it kind of needed to happen. Got a little bit overbought. So we'll see if we can test some near-term support right here, but the trend's still pretty positive right now.
Very good. Appreciate the update there. Well, again, one thing to note, we'll have weekly export sales will be out tomorrow morning, 7:30 Central. We'll take a look at those. Certainly visit about those in the War Room tomorrow morning. Also, it is Fun Fact Friday, so be sure to tune in. You never know what you're going to get. We certainly don't either. So be sure to tune in and enjoy Fun Fact Friday as we wrap up the week. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that we're discussing and going through here at AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.